or I would not have expected this type of movement with that news coming out. However, I mean, we are kind of just ranging, but with some really good moves on the NQ. Pretty predictable at times. Same way with the ES. Right. So we're about to get a little pop here to the high. I was looking at the Euro USD, seeing this little pattern right here on the 15, expecting this move. It hasn't taken out Asian highs like the markets have, but looks like we're about to. Or it's going to make a try. Yeah, I missed the Casper move yesterday where it come all the way back down and then popped. It was a good move. But yeah, I missed that one. Yeah, I thought it would get to about 70. This basically right here. This is what I was looking for. It's what I had down. We still can get there. But yeah, I thought this is where it was going to go. And then we just kind of got stopped right here. Didn't want to do it at all. Kind of filled up this inefficiency, got right here to the top of this little push up and just basically hit a wall, turned around, consolidated for a little bit, and then just dumped. Basically, this right here, just a liquidity purge, right? Just all this push up, and this right here was just getting rid of it. So you can tell this area right here had a lot of liquidity in it just because of all those wicks. It just kept bumping its head, and then eventually it just dumped back down to the weekly. I'm telling you, man, these the weekly, the daily, monthly, weekly, and the Monday range has come back into play more often over the last couple of weeks. So I have actually been paying attention to these levels a little more often than not. Let me take this one off real quick. Because I mean the weekly has been pretty solid so far. Yeah. Yeah, the NQ and the NQ also compared to the ES as of late has been able to push for some really good points, 50 points at times, where the ES will only be 10 or 12, and then those 50 points you have quite a few areas to enter. But then we've been getting a lot of downtime in the mornings, and we get like this junk right here after this huge momentous move. This is a long time to be right in this area. And if you're not going to sit here and watch the market. This is midday. You're not going to sit here and watch the market all the way through this to catch this move down. So, but if you do, all right. I saw it happening and I was like, yeah, we break down, we're coming back to the median. And then we come all the way back down to the weekly and then, kind of situated ourselves around the median before popping, afternoon. So really like this pattern right here that we're getting above. Would like to see this continue higher. We got the daily right there, and then I'm going to put this down just as some buy side sell side, just for a visual. I could always bring this over as well, considering we have played with it quite a bit. So an area that we could get to. This could be an area either we break through the sell side and continue down, or this is going to be kind of like the line in the sand, right? To move back up. More Kyle, more Pat. So like that we broke up. We have taken Asian and London highs with the NQ. Did we do it on the ES? I know we did it on the NQ. Yeah. Yeah. ES looking pretty strong. We got a little bit, mostly Canadian news this morning, and then we've got I think building permits at like 8:30 around the same time as Canadian news. So I don't think it's going to give the dollar too big of a jolt, even if the CAD CPI turns out to be really good for the CAD. The dollar is kind of already in that sinking motion, back into this gap over here. We do have some inefficiency below that looks like it wants to come down and get. So I am 100% okay with the dollar pulling back here and allowing the markets to kind of push up a little bit in anticipation of the funds rate tomorrow. I haven't heard anything I haven't read anything or whatever to try and see what they have been saying, what they're going to do. So I haven't really kept up with that. Actually, at first glance, 18 minutes ago, it said Federal Reserve is poised to leave rates unchanged. So if that's the case, bad for the dollar. So the dollar will continue to pull. Good morning, Kyle. So leave it at 5.5. See, be less about what to do now, but what, if anything, to do next. Yeah. Talking about inflation declining. Yeah. All good signs for the market, bad for the dollar. I've been talking about not really trusting this move, right? It's just kind of been grinding up. We've had some pretty good pushes as of late, but if they leave the interest rate alone, then we'll get this pullback into this year, probably the yearly. Maybe not all at once, but I would look to see these areas down in here to start getting tapped, the areas of inefficiency and all that. And then line in the sand, I would assume would probably be this guy. My mouse is going dead. Hopefully it'll last today. So if we have a down day today, pushing further down, 21 will come up and meet it. That'll probably give us a little bit of a pause. And then tomorrow's fund rate, if it's what they say it's going to be, then I would look for something down in here, clearing out all of this. And then if it's really bad, then we will just continue. So, because we do have a lot of built up liquidity pools down in here. I would put a dotted line right here, but we got the monthly and the yearly, or I would hit this as a structure line as a good area for price to come down into and kind of halt at. But since we got the monthly and the yearly right there, there's no need for it. Good evening, Toshier. To a lower time frame, you can see it's already kind of grabbing back. To me, this is very bearish. Right, we've already kind of broken down here. We've held, consolidated. We didn't reject off of it and make new highs. So I don't think the Monday low is going to hold it. We might not sink fast, but I think we get here until the rate comes out. So I can only say that so many times. But the Euro USD is poised the same way. All right, consolidation broke higher, and now we're consolidating again, making a new leg. We still have inefficiency up here. I'm going to go ahead and take that off, but I will replace it with a structure line. I'll get to it. Yes, ma'am. This little area right here looks pretty good. Actually, a little bit better than that one. But I think since the yearly's there, I'm going to leave that alone. I assume I haven't really kept up with the Cameron saga, his bike wreck and stuff. But I haven't heard anything negative about it. I know he had a pretty good head injury. Oh, okay. Different sign. Yeah, I haven't really kept up with it. I know ICT's gone through a pretty good rough patch. His dog passing and then kid getting some injured and like it's been pretty tough. Sorry, just looking to see. Anything kind of coincides with that, kind of like this area right here for price to come back up. Probably a pretty good area right in here. Breakout. We're going to run through that Monday high. Might slow down a little bit, come back for some inefficiency, work our way back up into here, and then eventually, possibly this trend line. And if this trend line is close to where this area is, that's going to be a pretty powerful spot for maybe the dollar to strengthen back up right in there. If not, and we just kind of bust through all of that, then sky's the limit. John, go up to a 4-hour chart. I don't see us making like a crazy, like V-shaped turnaround here by any means. But, you know, looking at this 4-hour chart, obviously, we get above something like that, then it's going to be weak dollar for a little bit. Pretty good recovery right there for the euro. What is all that? Oh, that's that. There. That's a good area for some structure. So that's pretty good insight into what the dollar could look like structurally. We've come down. We've already taken out the lows here, swept them. So it's a kind of a good time to turn around, I would say. Or at least to come back and just kind of clean up some areas. To show you what, yeah, I used to have the watermark on there all the time, and I took it off because I don't know where we at. There you go. Yeah. I guess because I started using these structure lines and all these other lines, I think it just kind of got noisy for me. That's the reason why I took it off. But yeah, I'll put it back on there while we're recording. That way, it's just better because can y'all see these up here? Maybe not. Y'all didn't even see where I was pointing. Oh, okay, barely. I got you. Watermark is just this right back here, the Euro USD 4-hour US dollar. I used to have that on all the charts and it used to be dead center. Maybe I'll move it up to the top. Maybe that'll be better for me. Have to figure out how to do that again. I'll figure it out. We'll figure it out at some point. Yeah. Not as dark. Is that good enough? Like y'all can still see that pretty good, right? I don't want to make it too light because then what's the point? There you go. All right, cool. Yeah, I didn't even think about that. Um, but yeah, talking about the Euro USD on this one, just to kind of get a sense of what the dollar looks like with the most popular other currency in the world. And obviously, it's been on a tear to the downside. Um, but now that we're kind of seeing signs of a possible turnaround in the dollar as from crushing up to kind of sliding, maybe we get the euro gives us some technically sound visuals of what this might do, because if the euro's running, then the dollar's probably dropping. So something to kind of look into. So if we start breaking and making new highs, these pullbacks become smaller and we start pushing, then the dollar is obviously falling, and then our markets will then start going up as well. So I got to do it on this one as well. Just a little button, not that big of a deal. Let me 15%. Yeah. Haven't started making this move up yet off of here from this inefficiency, but I do like this area to hold. I'd like to see maybe a little more pullback and then a real good push. Give me some type of candle right in here that we're breaking above, and then a continuation. And that should be pretty good. Right now, it looks like we're about 7 or 8 points from the Monday high. So if we don't break out here and we continue to grind down towards the 21, then I think this order block right here would be a good area for a bounce, and then possibly some type of structure here. Let me get all this off. Sorry. We meet the 21. If we continue to grind, maybe this becomes kind of our structure that we look for a push above and then a go. So being patient, but I kind of like that look to happen. Not long from now. I don't see, maybe a couple more candles, within the next hour we make this move. And then the news doesn't come out today until 8:30 Eastern. So right now we're just 6:30. Yeah. So this could happen before news. US dollar has building permits, but there's a lot of Canadian CPI that could make the dollar kind of move a little bit. So if the Canadian CPI numbers are bad for the Canadian, then we might get a small pullback in the dollar, which could give us a small pullback in the markets. So it's not something too serious. I don't think it obviously will change directions by any means, but and then that being the only news, that's really going to affect anything today, unless something comes out crazy. Then I think that you just fall back on your technicals. So I feel pretty bullish today on the market until we get up into this area, and then it's I don't see us running. I'll go ahead and put this up here though, just like I have it on the NQ. I don't see us running. I see us getting to some areas. Like this was a perfect just inefficiency, like cleanup right there. Went right to the bottom of that and turned around perfectly for the ES. So again, I don't see this thing just taking off and pushing higher. I see us getting to, again, areas of liquidity and kind of pumping the brakes and making these move down like it has been, right? Like we might get a decent little move to the upside, and then a turnaround cleanup of inefficiency might dip a little bit farther than expected, and then another push to the upside, and then again a cleanup of inefficiency waiting for tomorrow's market. So definitely would have some uh plays just like we've had the last couple of days, like this right in here, this push down right in here. Don't want another like full on overnight Sunday, Monday right in here anymore. We want to see these kind of pushes. I don't mind it ranging if we're ranging like this, right? So, we've got a lot of areas up in here in these wicks that price is going to need to kind of probably work through before it really decides to push higher. But I also see like some pretty good pullbacks before moving. So I think we can rely on the technicals. What is the market looking like? Have we taken out liquidity? Do we have inefficiency below or above us, in which that's where price is wanting to move to next in the moment? Over time, bullish until the news tomorrow. And then when the big news comes out tomorrow, then technicals don't matter. Wednesday is our funds rate and FOMC statement press conference. And then Thursday, we have the Swiss monetary policy, the pound monetary policy, our unemployment rate, Philly manufacturing, Lagarde for the euro is going to speak. Japan tentatively is putting out their monetary policy, Bank of Japan policy rate. So on Thursday night, but that could end up being Friday night into the weekend, because they do it whenever they want to. They just kind of say they're going to do it on a day, and then 2 days later, we forgot. Here it is. PMI on Friday, and then for all of them, for the euro, for the pound, and the USD. So it's going to get pretty newsy over the next few days after today. So it's the reason why I don't think we're going to, break out and just keep crushing to the upside. I didn't expect a lot of this yesterday, to be honest. But now that it has done this, we can actually, we can stay in the Monday range. Maybe little peaks out and then pullbacks in, pull back inside the range, work around the median, kind of hang out in the middle for a little bit before making another move. And then the rest of the week with the news, let the news dictate where the market's going to go from there. So, and I have a feeling that, the funds rate and everything, obviously, if the rhetoric is they're not raising interest rates and we keep it at 5.5, then the markets will definitely move to the upside, and it could be a pretty good candle. And then the rest of the week, if it's good for the dollar, we might just kind of grind back into some areas. I don't see it coming all the way up here and then immediately crushing down with PMI news. I don't think that'll happen. I think it's a good opportunity for the markets to recover from kind of pushed up. Now we're kind of pulling back. So I feel like this is a pretty good area for the markets to recover into this inefficiencies back up here to the monthly high. Because, I mean, look at this right here is a really good pattern on the 4 hour. Right? Consolidation, dip into these lows, sweep them, and immediate rejection up from the Monday high. We pulled back into this order block, and now we're breaking out away from it. So I think this is going to be a really good pattern to go bullish. Yeah, there you go. Box trade. I mean, it's the Monday range, right? Let's even look at, there's the 8 hour. Yeah. See, I'm trading that bullish. This is a lower time frame, 5 minute, 3 minute. I'm probably in this trade already with that type of pattern. The fact that we've taken out these lows and now we immediately rejected, even though we pulled back on this wick. To me, this is I like this candle, that candle right there. I like those candles at support. So price comes in at support and then gives me that candle right there. It's going to fill this wick for sure. And then if we break above it, we're going to continue. And the fact that we have all of this inefficiency above it, price has got reason to come up. But yeah, I'm trading that pattern all day on a lower time frame. There's a pretty good example of what it could look like, right? This is not the same candle, but it's pretty close, right? And we're definitely at a support. Prices come down. We've got inefficiency above it. We've made that last little run into stops, and then this candle comes up, makes a new high, and then we get these types of push away. So it's a very good timing on that on that example for it to pop into scene right there. And it doesn't matter that this is like a huge candle and this is not that big. It's just the difference in the time of the month or whatever, or what was happening here compared to what's happening here or whatever. So, but very similar pattern, and that's what I expect to happen. Now, do we continue to go higher after that? I mean, that's up to the news. It's up to whatever the markets want to do. Just right here, I think that this continues higher. We get a little pullback and then a continuation. So definitely what I'd be looking for on on the ES longer term. How's that look on the 6 hour? Yeah. If you like hammers. There. The hammer candle at support. Now, if this morning we start seeing something like this where we can draw a line under it, then I will expect a good pullback before that move to the upside. And it looks like on the hourly, it's kind of what it's looking like. So we're kind of getting this little grind up like that. Make that solid. Go with 2 so it's y'all can see it better. So if price continues to follow that trend right there in almost what I would consider a channel, right? Then with no breakout or no break below, like we just continue to just kind of put candlesticks inside here, eventually we're going to come down, right? Inefficiency below it, liquidity pool being built, will come down, make another bounce either off the median, maybe grab this liquidity right in here before making that move up. So another scenario that could easily play out today, especially this morning, right? Because I mean, we're still early. News didn't happen for a couple of hours. And so you could see liquidity being taken, inefficiency being grabbed before the actual move ends up happening. It's just a matter of being patient, looking at all time frames to really get the right story. There you go. Engineered liquidity. So my understanding of what ICT's like the Cameron trading is, I don't have 30-second chart on here. So I can only kind of go down to the 1 minute. But would be like, let's say right here, we've got this London high gets taken out. I mean, you can really just focus in on this right here. So easiest way. So this would be a significant high, right? A London high gets taken out. It's a pretty good move. We're going to more than likely get a pullback. So if we go back to the replay, we take that out. London high gets taken. At this point, when we take out a high like this, is when they'll go down to the 1 minute chart and they will look for, right, London high is taken. 30-second chart is when he'll go down and he'll look for a fair value gap, right? He will want this to keep breaking down, maybe even having a little bit of structure. Let me get this out of the way. So break down and then maybe have a little bit of a structure, right? And then a displacement break. And in that displacement, you have a fair value gap. This is going to be the fair value gap he plays to then push further down. And I don't know if the ES is the right, right, mini Shiloh. I don't know if the ES is the right instrument for it or the NQ. And the reason I say that is because the NQ is going to give you 10 handles pretty easily on any time frame. Whereas the ES, 10 to 12 handles, I mean, that's a day. I mean, you're going to get 30 out of the ES, but you're not going to get 30 right away. I mean, this huge move from here to here is literally from basically 505 to 509, 4 handles. And I can't see dropping into the 30-second time frame on the ES and catching 12 handles on it with this pattern. So to me, I'm assuming he's talking about using the NQ. And with the NQ, we'll go in and we'll see. Let's see how much more energetic. Well, let me get this out of the way. All right. So we'll do another replay of it. Actually, let me X out of it again. Go back to the 15-minute chart because this is going to be the higher time frames. 15-minute, hourly, whichever one you want to use. And if you're trading with a 30-second chart, you can use a 5-minute chart as your higher time frame. But technically, your high, being a technical trader, my higher time frame is going to start with the 15-minute chart. So 15-minute chart takes out pretty significant highs, Asia and the London at the same time. So at this point, you go into a 1-minute chart or a 30-second chart, which is what he's talking about, and you start looking for price to give you structure, which it is, right? So in this moment, I'm seeing straight line. So I want price to come down into it. I probably kind of want to see it bend and then break. And when it does, I want to take that fair value gap when it happens, when the price comes back into it and then go, right? And then you're looking for 10 to 12 handles, which is 10 to 12 points. So I would be looking for, let's say in this instance, say 38, I'd be looking for 28. So there's my 10 handle range on the NQ. So we'll let this play out. We're getting significant consolidation, which is probably a good thing. All right, there we go. There's a nice little push into the 21. Let's see if we get a fair value gap. We don't. So we're still waiting. And again, I'm not looking for a fair value gap in the same direction of the move. I'm looking for one opposite of that move. And right now, I don't know if we get it or not, but Nah, I doubt we get it. We probably have it right there. So I guess you could have taken it. You could possibly take it right there, but that's going to be a stop out, guarantee it, because look at that above it. So you don't want this when trading that because you're looking for 10 quick handles, right? You wanted this to end up with a fair value gap, price come back into it, and then a continuation to clear out that inefficiency right away. That's what you're looking for. The fact that we just kept grinding with no fair value gap, you just wait for the next move. Oh, look at that. I mean, clearly we haven't moved all the way back down here, but yeah, so that'd be a stop out. So we just waited too long, right? This type of the Cameron move is you're going to want it to happen right away, like within the first, to me, in my opinion, like in the first little bit. It's not going to be like a Casper and you're holding it open all day long or 4 hours or something like that. It's just not going to work that way. You're scalping for 10 points at a time. You want these things to happen quick. Um, so, so we've taken significant highs here, and this could have been a trade. I mean, hindsight, obviously, it could have been, but the fact that we've come back up through the highs, right, taking out liquidity again. This liquidity was brought. Let me look at it all the way up through it. Took out all that liquidity, and then an immediate rejection. Look for the trade right in here, and then go. Let's see if we can find one to the low side. I mean, this right here. Let's go 15-minute chart one more time. Over here. Replay it right there. All right. So 15-minute chart, it would have to be down here. All right. So I'd have to, like, we've come down into a higher time frame point of interest, right? Which is this weekly. We can get in this push off of it. So let me actually take away this guy and then drop into a 1-minute chart. There you go. Starting to get this type of situation, which I would actually, this right here is what I would love. We got that wick down into that below this, and then we immediately reject up. So anywhere right in here can be a buy, period. I'm not worried about this inefficiency. I'm not worried about a continuation. I'm looking at that rejection after consolidation, and now we're breaking higher. So I'm buying in this area. But let's just say I don't, and I haven't yet, just for purposes of what we're talking about. All right, we've come back down into this. Got a little fair value gap. We've come back down into this. 30-second wise, you've gotten in and out probably already. 84 to basically 91. You're looking for 10. You're almost out of it anyways. There's you a trade right there. This was the inefficiency. There's you a trade. And out. You don't get 10, right? But if you're already looking at this and that pattern right there is a buy for me. Similar to what I'm talking about on the higher time frame there. That pattern's a buy for me. Right. Consolidation, dip into the lows. We start to break out. Like this is a buy for me. And I'd probably be targeting one partial here and then targeting up here, which we know we don't get, but I know I'll at least get my partial. Yeah. But that's the premise behind what he's talking about. Price, but you got to be quick especially if you're trading on a 30-minute chart. And you can't look for 20, 30 points. I mean, you got to be satisfied with 10. You got to be satisfied with 7 to 10, depending on how many contracts you take out on it. And I would definitely be trading it on the mini and not on, on the micro, especially starting out. That's the only thing that I disagree sometimes with ICT. One, the amount of knowledge that he throws out there in a short period of time. And then two, he throws out that and he talks about the 30-second chart and stuff like that. Like it's super easy to trade. For some people, it will be if they've got the experience for it. But for a lot, that's a very advanced chart to be trading on because it's so fast. Too, you're used to looking at longer candles that take longer periods of time to make. And now you're at a 30-second chart. Like it's a completely different style of trading than what we've been talking about here. So I would be careful with it. If you try it, I would definitely paper trade with it for a while just to kind of figure it out. But if you've got Ninja Trader, you can use their 30-second chart with Ninja Trader if you're trading on it. But I would definitely be careful and paper trade it for a little bit, or at least micro trade it with one contract and super tight stops. Because that's another thing too. Like if I'm taking a trade off of the first fair value gap that comes in, or a fair value gap, whatever, when it pops up and comes back to, then my stop's going to be that, it's going to be a low because I'm getting in as early as possible. Because he's talking about as soon as he gets into here and rejects, you're looking at the first fair value gap. Well, my stop's going to be below that low, and I need to be in early, so my risk is very small. Because you're trading the immediate rejection of that. That's it. This is what you're trading. And if you can't get in early, then that is a no trade. So, yeah. It's very simple, and it's in saying it, right? You wait for a higher time frame point of interest to be taken out. It's what we've always talked about. You look for a displacement away from it, which is what we've always talked about, and then you look for the fair value gap and the return to that displacement, and then go, and that's what you're trading. So it's hey, take it easy, Chris. Appreciate you, man. It definitely, it is all fractal. It's just a different type of trading. You just have to be a lot quicker. And you have to be set on taking 7 to 10. Like I'm talking pow. And then with the NQ, it's a lot faster, especially on those smaller trades. You're going to get 7 to 10 points that happen pretty quick, especially during volatile times. Because I'm sure he's not doing this like this is the London Open and we're getting a pretty good move. This is a pretty volatile moment, but it's not the New York Open. And a lot of times the New York Open will take out some pretty good highs and pretty good lows. And those returns are super quick, 20 to 25 points in either direction, pretty fast in one candle. The candle will end up looking like this, but if you break that candle down, it looks more like this. Like this is tough trading. Doesn't look so tough when the candle looks like that at the end, but within that candle, it's pretty tough trading. So again, I know it, Jeremy Newsom, everything works, just not all the time. So that 30-second, 30-second strategy is definitely going to be profitable if you can be quick and stick to like the plan, and you're going to take small hits, but you should be able to make some winners. But you've got to be in and out. And then also you have to deal with the fact that your trading is in and over with very, very fast. And some people, I'm not satisfied with it. So I'm perfectly fine with waiting on the 5-minute chart for something like this to happen and then give me that fair value gap or this liquidity being held right here, waiting on something like that to happen. And then that candle comes in and going long. Right. Wait, just being more patient. You can drop into a 3-minute chart and see how that looks. Right there. I'm perfectly fine with waiting on that as opposed to looking for the immediate reversal after taking it out a higher time frame. POI. Because you could have taken 1 or 2 losses in here on 30-second chart and then 1 win on a 3-minute chart this morning. So all right. Well, I got to get these kiddos going. Yeah. I'm going to try to, Fred. You too, man. I appreciate y'all being here. I'm going to get out and this will be posted here shortly. So y'all end up having a great day and I will talk to you tomorrow. Good night, Miss Tochier.